The markets are shaky. The VIX is shaky. The bond market is all over the place. There is turmoil everywhere due to tariffs, but I feel that the market is going to recover and that it's stabilizing. And not only that, in this video, I'm going to explain to you guys why I believe this is rigged, set up, manipulated, and completely predetermined to work out in a specific way. Let's dive into the VIX, the stock market, and what Tom Lee has to say. Trump issued an exemption on electronics, smartphones, and computer components, but then turned around and said this is temporary. The stock market gapped up pre-hours and overnight, and then it's pulled back to fill this gap at support. We're still holding the change of character and the break of structure for the uptrend, which is really good. We're above the 200 moving day average on a lot of stocks, and the VIX is below the 200-day moving average. And this is something I explain to my students all the time. The 200-day moving average, the Bollinger Bands, the technical analysis, as well as the news and perception is reality, the sentiment, fear and greed index, oversold, overbought. There's a lot of things that go into stocks. If you want to make profits and grow your portfolio and understand, grow your knowledge in the stock market like my students, you can sign up at any time. Links in the information box below. I look forward to seeing you really soon. Just click on training. When you get to the website, you'll be able to watch a video and you'll be able to book a call with my team and I so I can help you grow your portfolio. And that's the goal, to help you go on your way and be able to live the life that you want to live. And I'm here to help you do just that. So I'll see you real soon. The big issue here is that Tom Lee thinks that the $700 price range for SPY is out by midsummer. He's now looking more to the $650, $660 by end of year or summer, which is possible. Right now, there's a lot of turmoil in the markets, but like I've said, this is completely rigged in my opinion, because the one thing they needed to do besides get their money into the stock market at a low price, which I said many times, if you go watch all my videos from last summer, if you're not a student of mine yet, you'll see them in the YouTube videos where I said that the stock market had $7 trillion from money markets and sidelines coming in. I said it was going to be coming in $7 trillion worth. And last Wednesday, $5 trillion came in. And all the people that got out were retail. You guys got stopped out, margin called out, panic selling. All the buying, most of the buying was big institution. But not only do they have to get in, they've got to let things calm down. Then they got to buy in again. They can't just buy $7 trillion at one time. It's going to be a few trillion at a time or less. They've got a few more trillion to bring into the market. So what's likely to happen, and I think is planned out, is they've had to create some form of panic in the bond market to destabilize things enough so that the feds, they would bail out, they would have a Fed put, and they would in turn cut interest rates. The only way to do that, because we now have hawkish members and we had all dovish members up until a few months ago. So their plan to bring this money into the stock market last summer and into the fall has changed, because the hawkish members are less likely to cut rates, which has already been said several months ago. So they don't want to cut these rates. So their plan was to bring the money in, tank the market, bring the money in just like they did, and get interest rate cuts. And if we would have had dovish members, they likely would have cut interest rates on all the market panic selling that happened over the past couple of weeks or months. But this hasn't happened because the members are hawkish, and Jerome Powell is even more hawkish than ever. And because of this, they are now destabilizing bonds and they're rallying up, and things are looking very shaky, and they're trying to get that to go across the board. It has to be in the bonds, the futures, and the market. And it's making it even harder because inflation's actually low. Month over month, year over year, inflation is down, and core inflation rate is 2.4%. And the feds were targeting that. They were targeting below 2.5, below 2.4, which is exactly where we're at right now, which makes it even harder to get interest rate cuts. So in my opinion, they're destabilizing a lot of things, hoping that they can get the market down, the futures down, as well as energies, which have already dropped. And they really want to drive the bond market and make things wild and volatile so that they have an excuse and an agenda to push rate cuts. And then if the feds cut the rates, within days and weeks, the market is just going to erupt way more than it has last week on Trump's tariffs. So I believe that has a lot to do with it. I'm not saying this is a fact, but I feel like this is what's going on. They're doing this intentional. There's no way that all of this just happened to be. There's a lot of intention here, and it's hard to exactly say what's intentional and what's not, but that's what it seems like to me. Let's take a listen to what Tom Lee had to say.
Futures are adding to Friday's somewhat surprising gains. For more on the markets, let's bring in Tom Lee, head of research at Fundstrat and chief investment officer of Fundstrat Capital, as well as a CNBC contributor. Last time you were on, Tom, you said, I think we can, and it was definitely one of your what seemed like outrageous calls at the time. You said we'd be at 5,500 on the S&P. We should be able to get back there fairly easy. I think we were below 5,000 at the point. We did get close. We got another pullback, but after Friday, we're almost at 5,400 again. What was your reasons for thinking that? I think you just thought that maybe if you see a cat and you keep clapping, it'll jump the first time, but after a while, it finally just ignores you. Is that going to happen with the markets and all this tariff backdrop?
Yes. I mean, I think I know what you're saying, which is I do think markets are getting a little desensitized.
That's what I mean, yeah.
Yeah. And I think part of it is if someone had an investor hat on, not tactical hat, you know, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there. And the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks.
Interesting. So when we were below 5,000 and you were on the S&P and you were at 7,100, that's like 40%. So you're now, and were you one of the high people on the street at 7,100? Were you there?
Well, our year end originally was 6,600, but we thought we could touch 7,000 mid-year. I think the 6,600 is still possible, but I do think the 7,100 mid-year is obviously it'd be very difficult to reach.
So
but it's possible.
6,600 by year end. What about you've made a lot of good calls based on moderating inflation. What did you make those numbers at the end of the week?
Well, I think that if we didn't have to consider tariffs, inflation is definitely tracking below expectations.
I mean, where the Fed wants it, almost.
Yeah. I mean, core inflation month over month at 0.00056. I mean, that's like literally hitting a wall.
Now, is that for good reasons or for bad reasons?
I think it's for the right reasons because,
oil?
Yeah, well, there's oil and foods off the boil, but it really is shelter is actually cooling to a 2% rate, and that is what you need to get inflation back down to 2.
Do you, at this point, foresee the worst case scenario in terms of dollar declines, 10-year yields due to people the Journal had an interesting piece today that it doesn't need to be that people just abandon the dollar and abandon the United States to invest in. It's just on the margin because it's a given that you cannot ignore the United States as the elephant in the room globally for all these things, for the, the currency, investments. But on the margin, it could make a big difference if there was even a slight lessening of what we were used to.
Yeah, I agree. I think that is the narrative at the moment that, U.S. exceptionalism's over and people are selling treasuries and dollars to buy other assets. But I'm not in that camp that it's sustainable because unless weaker dollar and higher yields suddenly makes the best companies in the world outside the U.S., the best and the most important companies in the world are American companies. They've produced the best shareholder return. And, if you look at the S&P, 40% of the returns of the S&P come from new companies every 10 years. Is there going to be suddenly the best new company coming out of Europe instead of the U.S. because of the dollar? And I doubt it. And I think U.S. companies are going to adapt.
So you heard what Tom Lee had to say about the market. He still believes that the SPY could run to 660. He says that it's overstretched, oversold, and that we're desensitized. And that's exactly what's happening. And I do concur with him, especially if Trump works out any type of tariff deals that are neutral to positive, things will get better and better. And ultimately is a pretty decent buying opportunity as long as we keep continuing to hold these levels. But the most important thing, in my opinion, that he said was that we're desensitized. We've sold so much and there's been so much fear. The fear is just wearing off because we've realized that it was an overreact to begin with. So there's no need to keep fearing this anymore. It's kind of in a shaky situation. You go around a corner and you get scared. It's kind of almost a similar sense of when you get in a car that goes really fast for the first time. Maybe you get nauseous, maybe you get sick, you get scared. But after you do it over and over again, you get desensitized. It no longer bothers you. Same as a roller coaster, same as something that bothers you and scares the living crap out of you. Same thing, you eventually get desensitized to it. You first wake up up, go outside. It's really bright outside. You're squinting, but after you've been out there for a little while, it's easier on the eyes. Your body adapts to everything. You jump in a cold pool in the summer, it's freezing, but after a few minutes, you get used to it. We are kind of in that same boat right now. The initial fear and panic and sell-off, then it got bought up, then more selling, and it kind of got smaller. The wave got smaller, and it's kind of smoothed out. It's like a ripple effect, up, down, like kind of something that's imbalanced, and it slows down. That's what's happened here. It was the initial shock one way, then the other, and it's kind of balancing itself out. We starting to realize we overreacted. The market overreacted, and that's where we're at. Let's take a look at the VIX right quick and gauge that, as well as a couple of stocks, and see what's actually happening in the market right now. When we look at the VIX, we can see this is actually a beautiful sign. It gapped down, it came back up, resisted, it's forced back down. If the VIX can break through $28 and start working its way down here, once we break 29 and start going below, it's officially in a downtrend, which technically it really is in a downtrend already, but this is really a strong change of character and break structure. We have two support levels on the VIX that we need to break. One is 28-ish, 28.50, and then after we break that, we've got to break 25 and come all the way down to 20. So between 20 and 29, there's a lot of support here. We got to break through that on the VIX, but you can see that the VIX is clearly in a downtrend. It is making lower highs and it's making lower lows. So the VIX is 100% in a downtrend, just like the SPY, absolutely positively 100% fact. Higher lows, then we've got higher highs. Although we did have a pullback right here, the lower lows still stands. Up, pulled all the way back, up, pull back, up, pull back, up, pull back, and now we're going up. I would like to see this week, SPY has the potential that it could come up and break. As long as we can break up in the 550, 555 range, then clearly an uptrend is in play. And as long as we can stay above the 200-day moving average, which we have done. So the SPY is very strong right now on its support. If we look at AMD, it's the same thing. We're in an uptrend. This is the reversal. As long as we get more good news out of tariffs, same thing with Meta, clear as day. It is in an uptrend, but this is a break of structure and change of character that happened today. So this is actually not a good thing right here. We're now in a consolidation and below the 200 moving day on Meta. Microsoft above the 200 moving day, and again, clear as day, uptrend. Google, uptrend. Futures, uptrend. Even Wayfair's in a slight uptrend. Actually, it's pretty noticeable here if you draw this line. So there you go. Perfect. I'm going to get this line right up there. So you can see uptrend for Wayfair, higher lows, and then we've got higher highs right here with this pullback that came back right there. So we are building a nice base of support and a reversal on almost all stocks. Apple too is now in an uptrend. It broke above the downtrend, so Apple is now broken out of this. Microsoft just broke above that as well. Google has also broken the downtrend on Friday. You can see right here. That was the downtrend as of Wednesday, actually. And even if we were to do this through Friday and today, when it gapped, it officially broke up. So Google has broken the downtrend. AMD, as you can see, has broken this downtrend the exact same way. This would have been right here, or even if we were to take it right there, that's a full downtrend. Today, it gapped above. So Friday and today, transitioning into today, was a legitimate change of character. So on a firm, let's check this out. We're going to do a line, and we're going to come up here and we're going to see how a firm is doing. I don't think it's broken out of the downtrend just yet. If we go here, it's resisting. We're still in a downtrend. If we come down to the body of the candle, like I like to do, which is stronger, we are breaking out of the downtrend. So you can see we are definitely breaking out, but the stock needs to stay above 41 or 42 going forward to officially clear this downtrend. So a firm is struggling just a little bit. So we've looked at these stocks. Let's take a look at SoFi and see what's going on there. Walmart, of course, is very bullish. If we look at Walmart, there's no doubt it's been a complete reversal, which is really good. Definitely not a downtrend anymore. If we look at SoFi, we can see this is pretty apparent that SoFi is breaking the downtrend already, or it already has broken the downtrend. I will get the line here and show you guys right there. Officially today, it's breaking the downtrend, and it is right where it needs to be, closer to $11 going forward. We break the downtrend. Hopefully we have some upward move going forward so we can clear this and use this as a support. As long as we stay above 1050, we've broken the downtrend going forward. This technical analysis is what I teach my students. I teach it in my boot camp and my training courses, as well as weekly coaching calls and my mastermind class, as well as my elite coaching. Very strong fundamentals to have, as well as being able to understand the psychology and the news and the sentiment of the market by being able to gauge the graphs on the charts and utilize the different price action that I showed you and the change of character, break of structure. You're able to gauge the likelihood of supports and where the stock's going to go, because it's all based on psychology. And this is something, like I said, I teach my students. If you're looking to grow your portfolio, your knowledge, maybe you want to retire, maybe you've gotten into the stock market and you're in over your head, I would love to help you. It's what drives me every single day. You guys can sign up for my Discord access, 2 weekly coaching sessions, one-on-one coaching, follow my trades. All my trades are in the Discord, and I help you understand technical analysis to help better you as an investor and a trader, so your money can work for you while you do the things you want to do. And I enjoy doing it. It's what drives me, like I said, every day, is to help others just like you. You can sign up at investwithcorey.com. Links in the information box below. Click on training. Once you get to the website, you'll be able to book a call with my team and I so that I can help you achieve your goals. I look forward to seeing you real soon. I'll see you in the Discord very soon, and I'll see you on the next video or upload. Take care of yourselves, fam.